All right, what's up, team? So, man, what a crazy last week, right? And it was just a major sell-off. What I saw was a lot of people selling the shares that they had, and I understand where you're coming from. I understand volatility is hard to stomach, and when I say volatility meaning the ups and downs, the swings of the trade, of the stock market in general. But you guys, one thing that I want you guys to remember is that that's how you make money. That's what sets apart the successful traders and the unsuccessful traders. If all of a sudden I have a certain belief in a company and I'm just, super adamant of their success and I believe in what they're doing, they have amazing CEOs, like Elon Musk, who, has been put to the test time and time before, and stuff like this happens. Imagine if I were to go ahead and sell off every single time and only buy when the stock is doing extremely, extremely well, when it's at its all-time highs. How much money would I really have? At the end of the day, I don't even think I'd have too much. That's kind of what we want to go ahead and focus on. We want to go ahead and make sure we're purchasing quality stocks, quality companies, at the best times. And it's hard to do. And this is a perfect example, and this is a great lesson at the same time. It's said to be, when you talk about it, it seems so much easier than when you're actually doing it. They always say, hey, make sure you're buying on the dip, buy on the dip. Yeah, hey, bro, buy on the dip. But once that dip happens, everybody be dipping, bro. And that's what ends up happening. But, we have to learn to go ahead and stomach, and at the same time, make sure we've done our due diligence. That way, when stuff like this happens, we're able to jump in. No matter what, you're still going to feel a certain type of way. Nobody likes to lose money. Nobody likes to see, the value of their account go down. But take a look at these investment firms, and that's another good example as well. Take a look at these CEOs. They have shares in this company, and when all of a sudden the shares start plummeting, do they sell off? Imagine if they did that. Imagine if they sold off their complete stake in their company. Catastrophe would happen. What do they end up doing? In times like these, if anything, they'll buy back shares to go ahead and show, consumers and investors that they still have, very firm belief in their company. So, keep that in mind. And that's something I tell myself on a daily basis as well. I envision myself, one day as a big CEO, along with Musk and Jeff Bezos and stuff like that. But I mentally have to prepare myself in order to go ahead and do so. If all of a sudden I'm not okay with seeing my account go down, and sometimes dramatically, it happens, then, am I really ready? So that's something I want you guys to go ahead and keep in mind. And at the same time, I'm going to go ahead and, share the screen so you guys can go ahead and see how small that decline was in comparison to the market just in general. On a 1 year basis, the volatility that happened this last week wasn't even too much if you take a look at it. But at the same time, guys, just remember, this is something that is easier said than done. So let's start practicing little by little. And if all of a sudden, when stuff like this happens, you have that feeling, then maybe it's time we assess, what type of companies we're investing in. If you're investing into companies, that were referred to you by one of your friends, or, you didn't really do too much research, then how do you think you're going to feel when all of a sudden the market starts to sell off? Or let's say, for example, you're a little too much in with your cash. How are you going to feel when the market starts to sell off? That's why it's very important, we have that 3 to 6 months saved up. And at the same time, it's not bad to distract ourselves. The market's going to go ahead and do what the market does. We can never really tell what's going to happen next in the stock market. Based off of the analysis that we have, the charts that are available to us, certain indicators, we can make, disciplined assumptions, but that's basically about it. So don't get into it too much. Looking at your account on a daily basis, especially when it's dropping, isn't a good thing. We want to go ahead and master that. So let me go. All right, guys. So this is the last 5 days. We were up here, and all of a sudden, and then started coming back up again. We got all excited, and then again, and then all of a sudden, back up again, and then again, man, they just be playing with your feelings. But take a look at the 1-year chart. Look at that. That's where we're at. This is the whole 1-year chart. So in the greater aspect, you know, if you would have been invested in the market, you wouldn't have lost too much. Yeah, all of a sudden, you know, those days were bad days, but we've usually been doing pretty, like I mentioned, you know, these are key times to go ahead and jump in. It's easier said than done, and I definitely recognize that, you know. And I'm not sure if this has ever happened to you, but what'll happen is I'll take a look at the charts and just think to myself, oh man, what if I would have bought right here? Or, oh man, what if I would have bought right here? What if I would have bought right here, you know, on the redder days? Now, like I mentioned, it's easy to talk the talk, but it's so much harder to walk the walk. And now this is something I want you guys to go ahead and, you know, process and really think about. You know, this week was one of those opportunities, you know, so remember, stay focused on your long-term goals and make sure that we're doing what successful traders do. So buy that dip, man. Now, there's a couple of great companies that I'll be jumping into and I'll be disclosing on our Discord chat. Companies such as Amazon, which is a great time to buy. You know, they've been a leader when it comes to e-commerce, and they're just taking over, man, when it comes to everything. Another one is Tesla, and Tesla is dear to my heart because it's put me through so much pain. And last but not least, Apple. You know, Apple is an amazing company. And at the same time, I want you guys to remember, you know, if you're investing into companies like this and stuff like the red days happen, you know, how fearful would you be of leaving your money into that in the stock market? You know, you've been able to go ahead and see the track record that they've established, and at the same time, the gains that they've been able to go ahead and, you know, throw out on a year-by-year basis. These are companies that have been tested, that have been through, you know, economic recessions and things of that sort. Now, that in comparison to the hottest stock that was referred to you by a friend. You know, this is what we're talking about, due diligence, and at the same time, just being mindful of how much money we have invested. We don't want to go ahead and throw our life savings into, you know, the investments that we're investing in, but we definitely do want to have a good chunk, but a sizable chunk that won't really hurt us if all of a sudden, for any reason, you know, it gets lost. Make sure you're doing your due diligence, researching the companies that you're invested in, and make sure you follow us. So, all right, guys, peace.